Do you think Tesla will be able to bounce back from the dip it is currently experiencing? Well, even experts are torn, with some pretty convinced that Tesla stock will soar soon, while others are not quite as sure. You definitely would not want to miss this info. In a Tesla press release on October 2nd, the company announced the production of 365,000 vehicles and the delivery of over 343,000 vehicles for Q3 2022. Tesla then thanked its loyal consumers for their patience as they work through the global supply chain and logistics challenges that have had a significant impact on the company. In the said press release, Tesla explained the reason behind its low number of deliveries. It was explained that while the company has successfully ramped up production from its various factories, it became increasingly challenging to secure vehicle transportation capacity and at a reasonable cost during peak logistics weeks. That said, Tesla began transitioning to a more even regional mix of vehicle builds each week in Q3. This led to an increase in cars in transit at the end of the quarter. However, they noted that these cars have been ordered and will be delivered to customers upon arrival at their destination. Get extra $10 cash. Open an account and deposit any amount on Moomoo. It's a limited bonus for celebrating Moomoo's 10th anniversary. Check the link below. Moomoo is a great platform to trade stocks with many unique, easy-to-use tools. I think a lot of you will find it really helpful, especially if you want to be more hands-on with your investments. For example, find out the right time to buy and sell stocks. Link in the description below. Tesla has notably missed Wall Street expectations on its Q3 production and delivery numbers. However, experts believe that if Tesla will be able to add at least 40,000 more vehicles on top of their last production numbers for Q3, Tesla's stock will go plus 10% in just a day. According to a NASDAQ article, Tesla could deliver more than 2 million vehicles in 2023. If this happens, the expected rise in the company's stock is possible. In August, Wedbush analyst Dan Ives cited Tesla's improving production rates at its high-output factory in China and the company's overall momentum heading into the end of the year. Although Tesla's Shanghai factory suffered major setbacks earlier this year when the local government restricted factory operations as part of its efforts to slow the spread of COVID-19, Tesla shared in its Q2 update that production rates at the important factory have not only rebounded, but have risen to record levels by the end of the period. When investors view this momentum alongside Tesla's reported continued improvement at its factory in California and its ramp-up in production at its new factories in Texas and Berlin, 2 million deliveries in 2023 begin to seem likely. After all, Tesla's factories are already tooled for annualized production rates of more than 1.9 million units annually, and Tesla management hasn't indicated any intention to slow down its investments in production capacity expansion. Tesla management has also indicated that it expects to have its current manufacturing capacity fully utilized by the end of the year. It can be noted that Tesla CEO Elon Musk said during the Q2 earnings call that the company has a good chance of exiting this year at 40,000 vehicles a week. This translates to an annualized run rate of more than 2 million units a year. Moreover, while delivering 2 million vehicles next year would be an exciting achievement for Tesla, it would represent only a fraction of the company's vision. Musk said at Tesla's annual shareholders meeting that the company eventually hopes to have built 10 to 12 factories, with the new one supporting massive output of around 1.5 to 2 million vehicles per year. Tesla bulls are optimistic that the EV company will continue to thrive amidst challenges. In fact, Tesla's share price has notably rocketed upward by more than 700% in 2020, despite it being the peak of the global COVID-19 pandemic. In an article, the American magazine newspaper Barron's noted that Tesla stock could rebound in 3 months. There are plenty of reasons Tesla bulls say they're optimistic about its prospects. For one, Tesla's growth has inspired confidence. After struggling to turn a profit for years, Musk's automaker just closed out its 6th consecutive profitable quarter and its first full year in the black. Tesla's biggest bulls also place immense value on Tesla's potential to make money outside of its core car business. They say that a future autonomous taxi service and energy storage unit and software developments like Tesla's long-awaited full self-driving mode could help the company realize profits unheard of in the car business, justifying its currently outsized valuation. Tesla's energy business is also booming. Experts believe that Tesla has carved out market share and has strong fundamentals and future growth opportunities. Tesla is known as the market leader in the EV industry and remains to be the leading EV company to this day. It can be noted that EVs weren't mainstream until Tesla launched the Model S in 2012. A decade later, electric is arguably the future of the automotive industry. Not only is Tesla widely recognized as the pioneer of electric vehicles, but competing automakers that build their companies on gas engines are trying to balance the past and future. This is a challenge that Tesla doesn't have to cope with. Although there are more and more competitors by the day, most companies are just getting started. While Tesla may not be performing according to the street's expectations, other EV makers are doing much more poorly in terms of production. Lucid Group produced 2,282 units in the third quarter, while legacy automaker Ford, which Musk disclosed was Tesla's closest competitor in the third quarter, sold an estimated 18,257 electric vehicles. Both of those pale in comparison to Tesla, which made 365,000 units. Tesla owns roughly two-thirds of the electric vehicle market in the United States and has a growing presence in China despite growing competition from local EV makers. Although Tesla's current market position is arguably unsatisfactory, the company's progress cannot be discounted altogether. Manufacturing vehicles is tough to start with, and electric cars are very high-tech. Tesla's competitors are struggling to ramp up production and are losing money in the process. Newer competitors like Lucid and Rivian Automotive are burning cash because they don't have enough production to make up for the costs of running factories. Financially, Tesla looks like the company best equipped to navigate the short-term challenges of a bear market and potential recession. However, Tesla's eye for the future seals the deal as the electric vehicle stock to own for the long haul. Consider that virtually all of its competition is still simply catching up, as new competitors and legacy automakers are just trying to establish a product line and grow production. Although Tesla stock has been extremely volatile in recent weeks, it appears that others are too. 2022 has been the worst year for the S&P 500 in more than a decade, according to a Forbes article. At the outset of the COVID-19 pandemic, the Fed slashed the federal funds rate to zero to prevent an economic catastrophe. In 2021, a combination of supply chain disruptions, pent-up consumer demand, historically low unemployment, and rock-bottom interest rates caused an inflation spike the likes of which had not been seen in decades. At the time, Fed policymakers dismissed the price spike as transitory inflation. However, higher prices continued longer than expected, forcing the Fed to start raising interest rates in March 2022. Experts believe that interest rates will likely rise a bit more in 2023. Professional investors see an 86% chance that Fed interest rates will rise another 1% by June 2023, according to CME Group. Meanwhile, Wall Street analysts are projecting S&P 500 earnings to decline 1.7% in the fourth quarter of 2022, with only a 1.7% rise in the first quarter of 2023. Higher interest rates are increasing the likelihood of an economic slowdown or even a recession. During times of economic uncertainty like this, investors tend to sell stocks and other risk assets, compressing stock earnings multiples and weighing on share prices. That said, higher interest rates are bad news for stock prices as they increase the cost of capital, which discourages companies from borrowing and investing to expand their businesses. The bad news for investors is that earnings growth tends to stagnate. There is also a negative impact on discounted cash flow valuations, which can hurt high-growth stocks. Overall, experts believe that Tesla has the flexibility to go after several substantial market opportunities, multiple swings at bat that makes the company somewhat unique. Although Tesla has been recently plagued with numerous issues, long-term investors willing to give Musk and the company the time to bring their visions to life could reap the rewards of steady innovation. The company's financial stability and long-term ambition make the stock a favorite electric vehicle idea for the long term. Of course, there are certain risks to Tesla's growth expectations. The risk surrounding the global supply chain required to support the growing production of complex products like electric vehicles is more top of mind to investors lately. The recent macro and geopolitical environments have shown that global supply chains are often more fragile than investors might think. Still, it can be noted that Tesla is known to thrive despite challenges. Make sure to subscribe to this channel for more Tesla stock content.